Good morning. It's Frontier opening bell here on Frontier Africa Reports. Thank you for joining us on the show. And with us on the program this morning, we've got Onyeka Ijoma, an industrial goods analyst with Vetiva Capital Management. Thank you for joining us on the program, Onyeka. Akitunde Suleiman, a research analyst with Greenwich Merchants Bank in Nigeria. Thanks a great deal for joining us, Akitunde. And of course, Bosin Omofaye, the executive editor and chief executive of Frontier Africa Reports. Let's take off this morning with the markets as we usually will do. We'll look at the numbers that crunched yesterday across the major markets in Africa. Nigeria was positive again yesterday, 0.17%. And of course, Ivory Coast, which is the BRVM market, continued to dip. Yesterday was the day before it was down. Yesterday it was also down by 2.26%. Egyptian stock exchange, the composite index there was up yesterday, sustaining the momentum that it had in the previous trading session. Yesterday was 1.13% up. And of course, Kenya, which is Nairobi Stock Exchange now, was positive 0.87% on Wednesday. For South Africa, the JSE moved by 1.54%. These are stock exchanges that have been below the Nigerian Stock Exchange as at the close of December 31st, 2020. Quickly, let's hear reactions to this particular data. Beginning with Kitunde Suleiman, and then we move to Onyeka, then Bosin. Just give us a bit of a sentence each as to what we are seeing across these major markets.
Thank you, Tempo. You said the Nigerian market is a bit mixed because it's just the start of the year, so investors are still staying on the sideline, and this cuts across every other market as well. You say to midday, the market could be significantly down. Then towards the close, you see a gradual movement towards the bullish trend. Investors are still looking at the market, trying to weigh in options and see how they can position for dividend. And since you're approaching the earnings era, we'll start seeing earnings trickle in gradually. What we are saying is investors just trying to see which of the stocks they can actually get a bargain on and obtain significant dividend yield.
Onyeka, anything to say quickly about the markets across Africa? West, east, north, south?
Yeah, so it's the start of the year. We're going to continue seeing a lot of mixed tradings, a lot of swings, whether in the positive and negative territories, as portfolio managers start to take their positions ahead of expectations, for 2021.
Okay.
One key thing is that we continue to expect positive trading in the Nigerian equity market. Yields are still quite weak in the Nigerian fixed income market, and they will continue to drive. They'll continue to keep making the equity market look even more attractive than it currently is. As at the start of trading session yesterday, system liquidity in the fixed income market was over ₦1 trillion, which is very significant and does not happen quite frequently, which tells you that investors are still largely risk-off fixed income securities, and we will continue to see some of that liquidity trickling into the equity markets.
Bosin, would you want to tell us why we are seeing a bit of decline in the BRVM lately?
Well, since a few days ago when the BRVM 10 composite was adjusted, I think the market was also, investors were also adjusting a little bit to the recomposition of that. Again, there are just about two main indexes on the BRVM, which is the BRVM composite and the BRVM 10 index. And both indices were down yesterday, both the composite and the 10. So which means that investors are looking at the new composition. They're trying to adjust their portfolios, as it were. But I know that somehow, as we see this week taper out, today is Thursday already, as early as next week, I'm sure investors will have adjusted accordingly, considering the fact that, of course, the BRVM is a small market, again, despite the fact it's a regional exchange for French-speaking countries in West Africa is still dominated largely by Cote d'Ivoire. So that is one point. And very quickly on the JSE, yes, the dollar situation is still a very major concern. The rand continues to weaken, but the JSE is going in a different direction. So even as we speak this morning, the GSE is still rallying again along the corridor of other emerging markets globally, taking their cue, of course, yesterday from the US market, where the Dow closed very strongly, about 400 basis points, despite the problem in Congress and the whole issue by the pro-Trump rioters breaking into the Congress and disrupting the Joe Biden's the electoral vote count and the whole conversation there. But that's being resolved right now, so I think the market is moving on.
Right. Now let's look at some economic and corporate stories as we have across the regions. Bosin, I'll start again with you in this case with the East African markets. We've got Kenya. Kenya's task force is going to be reviewing the outdated Cooperative Act. I understand that is one of the largest cooperative in Africa and about the 7th largest in across the world. Then if you move further now to National Hospital Insurance Fund, which is now flagging some 9 hospitals across 3 key counties in Kenya. They're clamping down on them for some fraudulent cases. Of course, NSE Gold, which is Nairobi Stock Exchange Gold ETF exchange traded fund, posted some 34.4% increase to 1.975 million shillings, Kenyan shillings, as of December 2020. Now, Ethiopian, this is a story from Ethiopia. There's a company there, Lion Insurance, posted some 21% profits to 51.8 million birr. So the 2019-2020 financial year calendar. And Rwanda is looking the electronic data warehouse there. We got a story that it is now the most unique innovation globally. Bosin, what are your thoughts? What's on all of these stories from East Africa? Do you want to speak to the Kenya's, the task force story, and of course the NHI story?
Yes, but if you allow me to start with Rwanda, that particular story about the electronic data warehouse struck me when it came out over the last 24 hours. And this was flagged globally by the Bank for International Settlements, the BIS, that this electronic data warehouse by Rwanda's central bank is the most innovative globally. I beg your pardon. So sorry about that, a little bit under the weather. So that shows that there's a whole lot of innovation that you can see across Africa. For example, the Nigeria's BVN program by the central bank has been rated one of the best BVN identity protection system anywhere in the world. And now Rwanda gets an innovation which is electronic data warehouse. And I think we are getting a whole lot done in Africa, despite the overall picture that things don't work. You can hardly get anything innovative done in Africa. I think we're beginning to show that, yes, some good things are happening on the continent. And that's why we think this story particularly deserves to be front-loaded and let everybody see that, yes, we can actually be innovative on the continent, and we can teach the world, the developed markets, quite a few things. Number 2 has to do with the hospitals fraud in Kenya. There's been a whole lot of stories about corruption as far as the COVID-19 contracts by some government officials, but there's some issues around some hospitals, some of the contractors who went away with the COVID-19. There was an over-invoicing of some items or equipment relating to COVID-19 and all that. So the authorities are up and running on this particular one. Ethiopia's yes, the Lion Insurance profit by 21%. I think this is a whole lot about what is going on within that particular economy. But again, this was 2019-2020 full year report, by the way. So when we get the 2020-21 report, we'll see the full impact of the COVID-19 period in that particular company. Thank you.
Sure. The NSE Gold ETF story is also a significant one, because I realized that even in the Nigerian Stock Exchange too, that was an instrument that helped a lot of foreign portfolio investors to exit the Nigerian markets in terms of capital or dividend repatriation as of 2020. So that didn't just play out in Nigeria as well. It also happened in other climes, which is what we're seeing here in South Africa. Let's move on down to West Africa, and I'd like to get your buying here, Akintunde and Onyeka, where it says Nigeria is to borrow dormant bank monies and, of course, unclaimed dividend from the capital market. The Nigerian Stock Exchange also unveiled CEOs for its new entities based on the demutualization plan. Access Bank Nigeria, which is one of the top tier banks there, now notified the exchange yesterday of the purchase of Cavmont Bank Zambia. That deal has now been sealed in Africa. That's a major story. AFC, Africa Finance Corporation, got some $250 million tier 2 capital from US-based International Development Finance Corporation. And of course, there's an industrial output which declined by some 3.1% at the end of September 2020. What's your peak on this cocktail of stories, Akintunde, before we move to Onyeka?
Thank you, Temple. I'll start with the NSA story. I think this is great news. If you check the names of the CEOs that were published yesterday, they are solid individuals with topmost integrity and technical abilities. So I think this is sound. The market is waiting for this demutualization to kick off, and let's see the benefits that we've all been waiting for in the Nigerian capital market. To dive into the Nigeria government borrowing money from dormant accounts and unclaimed dividend, this strikes me as the government just scampering for revenue. It's a double-edged sword, in as much as it gives the government the arsenal to battle the wars in terms of financial revenue downfall that has been experiencing over a lot of period now. It's not just the birth of COVID that has cut down the revenue. Before the birth of COVID, we've always battled with either an external shock or an inefficient methodology to generating revenue. But this is not sustainable because it is not a going concern in terms of raising funds. If we look at the outstanding unclaimed dividend is about 158 billion, and data upon which we can judge what the balance of dormant accounts owed is not available. We are expecting that the CBN will create some clarity, and we'll know how much the government will be taking from this two fronts in absolutely. But the thing is, this would impact banks generally, because a lot of banks are sitting on these funds, especially the first generation banks. The tier one banks are sitting on yield funds from dormant accounts. This means that they will have little and less money to play with. But the government itself needs to come out and clarify some issues around the yield and around individuals coming back to claim this money. There needs to be a modality at which we can call back these funds. The other angle to this is that government debt it would spike. As at the close of 2015, we had about 12 trillion in terms of public debt. As at today, it's about 32 trillion. That's about 155% spike in the space of 5 years. And the question is, where did the money go? If you ask me, I've not seen so much of a development to warrant such loans. So the thing with loan and debt in Nigeria is that the citizens do not see the benefit, and it's a concern because we can't keep borrowing and keep getting funds everywhere without we actually reaping the benefit of such debts. Because it's what we realize is that the global economy and Nigeria is not spared, is going into some debt crisis again. As at November, we had a global debt.
I'm sure we'll see how all of that pans out. Let's get the thoughts of Onyeka on this particular stories. Is there any opinion that you are juggling on this development at Verteva Capital Management?
Yeah, thank you, Tempo. It's a very interesting development. It's very interesting. It speaks to the It speaks to the funding need of the government at the moment. We know that the government has been trying to shore up its budgetary support for a while now, since the start of the pandemic. So pre-pandemic, we had some financing challenges already. The pandemic just sort of exposed a lot more of the weaknesses in our budget financing ability, and the government is I should use I feel comfortable using the word desperate at the moment to find funds to fund not just in this case not just capital expenditure but also recurrent expenditure and debt service. um, in a few days, in about 2 weeks from now, or 2 or 3 weeks from now, we have a Eurobond maturing. There's no, we don't have any clarity on how the government is going to pay off this Eurobond. The timeline is too short for them to raise another Eurobond to refinance this current one. Um, it just seems like we're going to draw down on our on our external reserves, which is something that the CBN and the federal government have been very reluctant to do for a while due to its impact on their ability to manage the exchange rates that we have at the moment. And we see that there's a lot of demand. The government is the AFCFT like we're kicking off this 2021 basically. There's going to be a lot of infrastructure demand, not just from Nigeria, not just in Nigeria, but across the whole of Africa. And it's going to be an infrastructure game. Every country is trying to win. I mean, technically, it's not just a zero-sum game in this case. There's a potential for every country to win, but some countries will come out ahead. Some countries will position themselves more in terms of transportation of goods and services and in the manufacturing space. And Nigeria, as well as every other African country, is trying to win that race, which means strong demand for infrastructure development. And all these things are not cheap. They require significant funding. The infrastructure gap in Nigeria is estimated somewhere between 2 trillion and $3 trillion. And $3 trillion. According to a 2018 study by McKinsey, Nigeria would need to invest over $100 billion in infrastructure for the next 20 to 30 years to be able to solidly bridge the infrastructure gap, and we're not anywhere close to that, right? And so we're seeing the government explore different opportunities, different ways to do that. I'm not entirely opposed to this. I think we need innovative solutions. We know the situation they are in. A lot of it has been caused by
But Onyeka,
poor
the point is,
governance.
this is like Akintunde mentioned, it is going to really, really challenge the amount of cash at the disposal of the banks, and of course, some of these companies that are listed in the Nigerian Stock Exchange.
Of course it will. Of course it will. But it's the whenever there's government borrowing, it always crowds out private sector borrowing. It's one of it's always there's always that trade off. Here we're just seeing a more direct. We're just seeing it represented a lot more directly.
Bosun, do you think they will be
Previously,
able, the companies will be able to mitigate the impact of this fund pullouts?
I think
we don't have a lot of clarity. Okay, sorry, Boasim. Go
Yeah,
on.
I'm sorry. I'm sorry. I think we have a peculiar problem on our hands because of time constraint. I'm not sure we can finish it up on it this morning, considering the time on the show. But just very quickly, one, this is quite an unusual way of borrowing, and we don't have a whole lot of clarity here whether this will be structured as a treasury bill or a bond. There's no clarity on that yet. But I have a sense that having the DMO named as the superintendent of this particular unclaimed funds trust fund, it suggests that somewhat is going to be something like that. At what yield or interest will it come to whose money has been taken? That's number one. 158 billion or 200 billion naira in unclaimed dividends is not a whole lot of money, considering the big hole in our pocket as a fiscal authority, as a sovereign. So 200 billion is not any, it doesn't scratch anything at all, whether to pay salaries or to put into infrastructure. Number three is the fact that the unclaimed dormant bank account, I think that's where that's where the devil is in the details. I guess there will be a whole lot of much bigger foreign currencies sitting down there, and naira as well that had been there. How the government come to 6 years, not 10 years or 5 years, is anyone's guess. But I think as the days go by, we'll find out why 6 years was the target. What was the idea? If we piggyback 6 years, that takes us to the beginning of the Buhari's administration, as of today. That means that they are targeting monies in this account since President Buhari took office in 2015. I found that very clever, in the manner of speaking, that it doesn't go way back beyond that. So, which means that they are targeting a whole lot of funds. Perhaps a bit of anti-corruption move here, by the way, and say, look, if we can't get this money out from you through EFCC, ICPC, whatever, we might as well take it through the back door, legally speaking, and utilize it and make sure that we warehouse it. Once the money is transferred, now look at the provision of the Finance Act. If the bank has to transfer the money, registrars will have to transfer the claim dividend. It means that, look, it's a sweeping thing. Government is using this to sweep. It's not to sweep the whole credits. Get all the monies that they can. So I guess they've done a whole lot of smart work here, and find out that if they go through the front door of anti-corruption to say we want to seize these and that and these and that, there's going to be a whole lot of things they've seen in the last 6 years. Okay, fine, everybody, can we take this money and use it? We'll give you social percentage. But I think something is going on here. We'll find out in the days and weeks ahead. But something is really fishy.
Absolutely. There's a whole lot that the federal government owes Nigerians in terms of information clarity on this particular development.
Actually, is smiling, I know. Everybody gets the sense. Some money, 6 years.
Absolutely. For the South African and Northern African markets are also very significant. Let's get your buying now on South African space, where the Prosus company is buying some new 231,957 units of shares belonging to Naspers for around 679.3 million rands. Of course, other stories we have Land Bank. The financial year ended 31st of March 2020. It's going to be delayed till Q1 2021. That's some kind of forward guidance about the earnings of that company. Sogo Sun Hotels raises stake in hospitality property funds to 95.79%, and Sidco International shareholders agrees on the cap to raise 1 billion from 500 million ordinary shares of the company. Bosun, you are the big one when it comes to African stories.
I just going to touch only on one of the story, which is the Sidco. Sidco is this agro-allied company in Botswana and in Southern Africa. And it's a company that is really doing well within that region. So it wasn't difficult for the shareholders to say, look, we approve you to get additional 1 billion ordinary shares in. Because again, food sustainability, food inflation is creeping up everywhere. And I'm sure all the analysts, everyone agrees. So if you are doing very well, for example, if you look at the Nigerian space, if the shareholders of a Presco or Como Oil comes out today and say, look, we're floating so shares or whatever, I'm sure Akitude Sulaiman Oyeka will pick up a few of those things, knowing fully well the importance of agriculture, agro-allied, agro-manufacturing, agro-industrialization, and all of that. So it's good news. It's any day, I'm sure agriculture is the way to go, and Sidco has just brought that to the fore. I think it's another icing on the cake for them, for this particular company.
Well, Onyeka and Akitunde, do you have any comments on the South African market before we quickly finish off with the northern markets?
Yeah, for me, I agree with Boasin. I mean, with the anticipation that for 2021 you see commodity prices rise, and this is just a good time. I mean, to key in those investments, because by the time you don't want to be caught up in the middle, we are saying that economies will start picking up, industrialization will pick up despite the second wave. We do not expect it to be as severe as we had in the first wave. Yes, there are a lot of lockdowns being announced across markets, but we do not expect that this will go beyond the first quarter marks. Beginning of second quarter, we'll start seeing a slowdown, and economies and businesses can pick up. So the general anticipation, the general forecast is that commodity prices will pick up, and we'll start seeing industries begin doing business as they used to in the past. So it's a good time to take those investments. It's a good time to raise those funds while the market is still calming its tides before it picks up.
All right. Onyeka, let me get you to speak to the northern market, the North African market. And of course, we've got North African meals, a net loss of some 6.895 million Egyptian pounds in 5 months. Egyptian Saudi Insurance exits real estate Egyptian consortium. And of course, Morocco economic growth projected at 0.5% in Q1 or 1Q, first quarter of 2021. Then you have the Tunisia inflation stabilizing at 4.9% in December 2020. It was the same thing for November. I know for you, Onyeka, you've got your eyes fixed on the Nigerian inflation for the last month. What are your thoughts on inflation, and of course the inflation story from that, and of course the economic story of projected for Morocco?
Yeah, so for Morocco, first off, it's more about their GDP growth. Basically, there's an expectation of less than 1%, GDP growth in the first quarter of 2020, which is a very quick recovery. Which is a very quick recovery, given that in most parts of Africa, even within North Africa, Q1 was a more stable year. We had not started to feel as much the impact of the pandemic on the overall economy. And so we still had a largely normal Q1 in 2020. Given the roller coaster 2020 that we had after the end of Q1, it's impressive to see that the economy has bounced back, recovered quickly enough to even record any growth relative to the first quarter in 2020.
Okay. Looks like we're having an audio challenge with Onyeka.
In Nigeria, we're next to that. We're still expecting. Oh, hello. Can you hear me now?
Yes, we can hear you now. Better.
Okay. So I said, yeah.
I need to make it snap because we need to round off.
Yeah, so I said, yeah. So it's very impressive that we're going to see that growth, those growth levels in Q1 for Morocco in 2020. We're not expecting that in Nigeria. We expect further contraction in the first quarter, right, even throughout the first half of 2020 before we start to see some levels of stabilization. And in terms of inflation, we are going to continue to see heightened levels of inflation in Nigeria. The only positive thing that we will see is, with the reopening of the border, an expected increase in food supply, we should start to see food inflation taper mildly, before, yeah.
All right, Onyeka, thank you. Bosun, do you have 20 seconds to make a comment?
Yes, I just think the Morocco's 0.1 growth story will be great. According to the latest World Bank, Sub-Saharan Africa, Kenya is going to be the strongest, according to the latest report. Morocco's 0.1% for the first quarter is a very modest one, and I think is a whole lot better than some of the projections we're seeing from other sovereigns such as Nigeria. Thank you.
Right. Thank you so very much for your comments and for your analysis on the show this morning. We appreciate them. Onyeka Ijoma, industrial goods analyst with Vetiver Capital Management. Thanks a great deal. Akintunde Suleiman, research analyst with Greenwich Merchant Bank. Thanks a great deal for your analysis. Bosun Omofaye, executive editor and chief executive of Frontier Africa Reports. Thank you all for making your presence here on African Opening Bell. Thanks a great deal, and do have a profitable day. Bye for now.